Let me ask first about animal spirits, Otto. We haven't seen at UBS the same kind of trading revenue revival that we saw in the U.S., but it's still there in equities. Are animal spirits back?
Well, I think the investment banking business is always, a bit variable. I mean, it fluctuates from quarter to quarter. Like it was just pointed out, I mean, UBS had scaled back in fixed income quite significantly. Yes, maybe a small disappointment, if you like, that it hasn't been as strong as some of the U.S. Investment banks have been in that area. But I mean, I wouldn't necessarily read anything major into that. Animal spirits back, I think, in the market, yeah, there certainly has been a very strong return to bank stocks and bank investments in recent weeks. They've been one of the outperforming sectors, really. So, yes, clearly.
Otto, in some ways, UBS has had the right business model for the last few years. And yes, maybe it hasn't been easy, but nevertheless, compared with some of its peers that have been heavily invested into fixed income, they've done well. My question is, if we do see the return of animal spirits, does UBS have the best business model, or do banks like Goldman Sachs, or dare I say it, even Deutsche Bank, have better models?
Well, I mean, I think UBS's model, to me, still actually makes a lot of sense because, I mean, the reason for the significant change they made, and to some extent, actually, that has been made by others as well, and again, others are in the process of implementing something along those lines. So the reason is really that regulation has changed, and that change in regulation has fundamentally changed the economics of fixed income trading in particular. I mean, not so much the primary side where even UBS did okay really, but the trading business where a balance sheet heavy approach to fixed income trading is just very, very difficult to make profitable because of the high capital charges that you have nowadays and you didn't have in the past. And I think that really underpins that change, and I don't think that's going away, really.
We have seen, I think, Bank of America, Merrill Lynch came out and upgraded European banks today. A lot of people have been saying European banks have turned the corner. Do you think that's the case in general? European banks are now a safe investment?
Yes, I mean, for me, I'm in the fixed income market, in the credit market. I would certainly subscribe to that view broadly, maybe not for all. I mean, clearly in Italy, there's still issues to sort out. A few other countries, mostly in Southern Europe also, Portugal, clearly. But I mean, banks, I think, in Europe have come a long way. They have basically fixed capital by and large. Asset quality is, in most countries, really fine. I mean, there are no big issues. There's improvements in others, such as Spain, very noticeable, steady improvements. Like I said, Italy still has some issues, but I mean, apart from those well-known problems, I think the banks are really in a decent shape now, and I think the market is reflecting that and looking, I think, from the equity market's perspective, more at dividend distribution now rather than capital rebuild. And from a fixed income perspective, I mean, steady earnings, and as long as asset quality doesn't deteriorate, it's really sort of a pretty benign environment for the time being.